Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as stockcharts.com. So this week, things are getting a little bit interesting for me. We're going to just spend some time reviewing the market action, and there's a reason for that. I really didn't like that JP Morgan and Goldman Sachs reported this morning and the market didn't do anything. They just closed flat. So I'm starting to worry a little bit that the price of the market is already built in these great earnings. And of course, this is the quarter that when we look back, it has the easiest comparables, and going forward, the comparables will get more difficult. That doesn't mean that the market can't still go up, but it's definitely starting to weaken, and I'll show some of the things that I'm starting to see that are just making me think a little bit different. So I've been bullish for, 5 or 6 weeks here since, maybe even longer, since the mid-May low when the NASDAQ started to turn up. And as we come through here, we're coming into options expiration day for Friday, and I just want to make sure that we're aware of what's going on in the broader picture as we do this. And so for me, the market risks jumped on Tuesday. Just the financials didn't behave well enough, in my opinion. The tech area, lots of the charts, and I'll show you just take some samples and then you'll have the same idea of how I kind of evaluate that. And then oil, I continue to be bullish on oil. I just don't know if it can rally on its own, but it's really quite an interesting story there. So let's jump into the charts. So first of all, one of the things I like to do the most with this homepage is I like to use this box in here. And so we have the different indexes on the right. Over here is the S&P 500, and you can see the chart changes as I click on these different ones. Here's the S&P 100, very similar to the NASDAQ 100. But the big thing for me is when I look across these indexes, what I want to pay attention to is the price action on the charts, and it's still very positive. It's difficult to have any issues with what we see here. So I have this chart of the NASDAQ. This is just a 60-minute chart, and you can see pretty much holding above this 34 period moving average on a 60-minute chart. That's pretty bullish. I have this chart here that I've been following. You can just see it's been a ribbon higher. It's been very, very smooth, and nothing on this chart, nothing. The long-term MACD histograms, short-term PPO histogram or PPO momentum indicator, all being very, very bullish since early June. So we ran up out of the May lows, pulled back into this June, and it's been a wonderful run. So everything still looks bullish. That's the good news. What is starting to puzzle me when I roll through this chart, so here's the NASDAQ daily, and what we can see on this chart, obviously we're just climbing nice and high. On Tuesday we had pretty much a reversal bar where we tested higher, closed right on the lows, and let's call it flat. With the day before it was hardly negative but flat. Anyway, we did have another negative day in terms of higher volume on a down day. Now the down day, let's call it flat. So I don't want to use it as a distribution day, but I do want to think about it from the perspective of, we did have a high volume day here on a down day. That was last Thursday, and then as we go through the next week here, I just want to see if the market's got the ability to hold up, and I think more importantly, set your stops relatively tight now, or what I plan on doing is setting my stops relatively tight. So if the market pulls back, it just kicks me out. I'm actually not that worried about missing upside here. And one of the reasons for that, when we look at the PPO back coming out of that November low, we hovered up here for almost 3 months with a PPO nice and high. In April, we ran up and pulled right back, and that was not a bad place to to let somebody else own the stocks. And then we had a big run up here, and it's continued to point higher. Price action today was a little iffy. That's all we can say about it. But the point I would make is our PPO is back up near this prior high and subject to at least being aware of the potential for weakness to start to show up. So what I thought would be a big bullish day with the banks kicking off earnings season and really posting some great numbers, the market didn't respond that well, in my opinion. Overall, it kind of jerked up in the morning and jerked back in the afternoon. So we do have this weekly chart here of the NASDAQ, and one of the things, let me just zoom in on the last period of time here. One of the ways that I like to analyze this, so we have this PPO trend here, and I'm a big believer in the trend in momentum. So let me just get rid of the full stochastic and maybe a few other indicators here. I just want a little bit higher profile, so it's easier to see the point I want to make. We can get rid of the scooter line data as well. And what happens here on this chart while I do this, I have my width and my height set. And then as I take away indicators, it'll just take the rest of the panels and actually expand them to fill that. So so that's what I'm trying to do here. So we're getting rid of the that empty panel that was up top. So now what I want to highlight is this downward trend here in momentum. And again, we're on a weekly chart, so this goes all the way back to 2019. We just recently had a breakout for me, which was this downtrend right here. And we had this break of this momentum downtrend, and we started to turn higher. Cool. What we also have, though, is this bigger picture trend. And this bigger picture trend is coming into play pretty much right now. So if we just get rid of this other line here, what we want to be aware of, so we notice in this first area here, just want to kind of describe the divergence. So we have this high here, then we have a higher, whoops, doesn't want me to do that. And it uses the closing price. So sometimes when you're looking at this, you'll see a price bar stick up above it. The reason is the momentum indicator is actually based on the close for that week, so down here. And, sometimes it'll fit to use it and sometimes it won't fit to use that bar. Typically, I want to make sure that I'm going off the close here because it looks like the market didn't really climb that much. But here was the close, the highest close in this period when it made this top in the momentum. The next place here, we kind of had a flat market, but we had a lower high on the PPO, so that was not great. Now we have this bigger picture where we have a higher high in price and still a lower high, but again, we're watching to see if we can turn up and show some energy here and really kind of pop to the upside. So that would be what we're watching for. If we don't get that, it's the fact that this is the second lower high down here, really starting to show that the market might be running out of steam. Now, that might not be obvious just yet, but what we can do is use a little bit of history. And the history that I want to point out is we can open this chart up to many, many years. Let's just pick 20. So what we see on this chart here is this momentum downtrend. And if you look in 2019, we have other periods where we've had that same sort of double trend down. This one was a little bit steeper. This one was just a 2 bump. But when we start to get this lower trend, we need to be a little bit more cautious. And so here, this one took a long time to unwind. There was one here that was a little bit flat. There was kind of a double peak here before it started to break down in 2018. So when you're getting these long down sloping momentum curves, at least be aware of where we are in the cycle. And that is that, we've been going on almost a year with momentum starting to wane, and that doesn't mean it's bad. It just naturally happens. You have the big run up, and then the market still climbs higher on lower momentum. But the goal is to just try to figure out if the market's going to get weak on me, what would make me leave. And typically, you can see that the NASDAQ doesn't go below zero very, very often. The PPO momentum wave for the last 11, 12 years has basically bounced at zero. 2016 got a little bit below, 2019 a little bit below. For the most part, that's where our big bounces were. When we had markets all the way down here in very low levels, you can see there was extreme market pullbacks that went on during that. I'm not expecting a market pullback from there, but we could definitely get a big jog here that's big enough to come all the way down to the zero line, just kind of correct, and then maybe September, October, who knows, have our run out of there. So I want to be a little bit cautious with this, I'll call it downtrend in momentum, but uptrend in price, and then we start to get the wobbly price action that we got today, and couple that with weak breadth. So when we talk about weak breadth, I'm just going to go get, whoops, not that chart. I'm just going to go get a different chart list here. When we look at breadth, so here's the NASDAQ advanced decline, and it's been chopping sideways since February. It hasn't really been able to push higher, and one of the things we liked was on Friday we had a nice spike suggesting perhaps an upside momentum. Could also be an exhaustion push where we just had lots of effort, but the price of the market moved up significantly, but wasn't able to do anything with it come Monday, Tuesday. So Monday we had relatively low advanced declines, so that compares the number of advancing versus declining stocks, and that was almost near zero here. And then Tuesday was a huge down day, even though the market was flat for the NASDAQ. So NASDAQ 100. So all of that adds up to me to be more worrisome from a strength perspective. Why, after such a good thrust on Friday, could we do nothing on Monday? And then Tuesday, even though the market barely moved down, we had this big negative advanced decline data. So really unsettling here as the market's kind of gyrating sideways. Now, the NASDAQ has been different than the New York stock market in a couple of different ways. The New York has held its uptrend all the way through here. It also had a weak Tuesday, but you can also see when we take the 2-week moving average of the advanced decline line, typically our peaks were getting up into this higher level 5, 6, 700. We haven't really been able to do that. We're up around the 250 now. We can go up slower, so that's okay. But what we don't want to see is spending a lot of time on the negative side of the momentum indicators and on these uptrend lines. So here we have the uptrend line for the New York Composite, and if that was start to break, that would be a significant trend change, right? Basically, since November on the rise out of the vaccine data, that really initiated a rally for us, and we've been going on 8.5 months already on that run. So it's not like we haven't had a big run. The real question is, can we hold up here? So that's kind of the backdrop of why I get a little bit nervous. Now, I also have a chart. This is the up-down percentage, and it hasn't given us our data for Tuesday. But we have a nice high push here on Friday, and then almost nothing on Monday, which is okay, but it would be better if it was a little more responsive. So on the advanced decline percentage, we don't have Tuesday's data either. I'm recording this on Tuesday around 7 o'clock Eastern, 6:45. And so what I'm watching for is if all of a sudden all these trend lines start to break, that's going to be a more meaningful change. And the other places to watch for is the McClellan oscillator last week wasn't very bullish, and it's easier to see on this particular panel. For the last 5 weeks, the summation index has been falling, and the McClellan oscillator itself has been staying below zero, which isn't really a good look. And so those two criteria bother me a little bit, but you can have a market that doesn't have a lot of advancing stocks, and it can be carried by the heavyweights, the Apple and Amazon, and we've seen that lately. What we wanted to see is it broaden out, but one of the triggers that we got last week on the McClellan oscillator was we tried to break out in April, May, and then now on our most recent rally at the end of June, we went negative, and we're still negative. This is a weekly chart. So with that, when I look at the summation index, I don't want to see these big down red candles. I really want to see them kind of work up. And so we had stalled for 3 weeks here, even though the market kept pushing to new highs. And so now we have these big downstrokes, and those are concerning to me because where did we roll over? We rolled over at a relatively low level, the 200 level, and we can get all the way down to the minus 200 and still kind of hold our uptrend. We'll have little pullbacks, but we need to hold that. It's when we get these bigger dips that we have meaningful price moves down. As we go below zero here, we want to be quite mindful of that, and it wouldn't take very much to get there. This downstroke here was a little over 100 points. So if we went from 100 down to zero this week, that would be a bit more concerning. So those are kind of the things I'm looking at. The breadth is starting to shrink. My data has still been holding me in an uptrend, and so I've continued to stay long, but we really have to start wondering about that. Now I want to briefly grab a couple charts out of here. Right in here we have the bank index, and what we see for the bank index, this is down 1.68% end of Tuesday, but we're testing this horizontal breakout level for the banks, and I really hoped this was the turning point for the banks to go back north. And you can see our relative strength against the S&P 500 has been waning. So if the banks aren't going to be a top performing stock, which is what the ETF, which is what the scooter rink tells us, we need to be aware that all of a sudden this is starting to fade, and they're becoming less strong relative to other groups. And if they start to actually go with a really low scooter ranking, you definitely want to avoid them because they're underperforming the overall market. That's one of the concerns that we're staring at. So to have this kind of weakness show up here wasn't great. Now, I also mentioned tech, and we could go through a whole bunch of different things. One of the things I like to do, my actual home screen, not that I'm a stock investor or anything, is this ticker cloud. But when you quickly look at it, it shows you kind of all of the top names out there that are being watched. And one of the things we're seeing, so here's booking.com, and it's trying to hold above the 200-day moving average. This is in travel and tourism, which quite frankly has been one of the biggest areas of interest since people were able to start traveling again. So this has been pretty meaningful. But you can see we really haven't done anything since February, and we're trying to hold the 200-day. And today, on what I thought would be a good thrust kind of through this downtrend, didn't happen. Now, Kathy Woods from ARK mentions that for her, a defensive play is to move into Microsoft, Apple, Amazon, those large tech companies, because they have cash flow and they behave just like the Walmart of old, where you're looking for cash flow in a weak market, something that you can hold on, and you know the stock's not going very far down. They've got big buybacks and that kind of thing. Well, look at the downstroke, the outside bar on Amazon on Tuesday. Again, for Miss Woods, what you're looking at is probably, even if it got back into this middle area, she's still happy. She's holding up relatively speaking. But the question I have, Apple here is trying to break through prior highs, so this is a pretty important zone. If it starts to fall down here, that wouldn't be a surprise. And then when we go to Microsoft, that's a nice bullish push. I have to like that. But again, if you're moving into these stocks for safety, they're not really going to tell us what's going on underneath the surface. So I went and I looked at Crowd, and this had broken out, but it's really had a muted effect, right? If it was going to blow through prior highs, we chopped around here for almost 2 weeks, then we moved up one day and have not been able to find new buyers showing up on the breakouts. That is a sign to me that we just don't have the power to keep going. Now what we're doing is we're actually putting pressure on this uptrend that started on May 10th or May 17th. And so, sorry about scrolling around so much. What I want to show here is if I draw a line under this uptrend, that's, we could put it here, could give it a little bit more room if we wanted off those two bottom areas. So it's touching here and here. But the idea being, it doesn't really matter how you do it. We're getting close to an area that you want to be cautious. When we look at the momentum indicator, it's already giving us our sell signal, right? Whether we use this trend line or this trend line, that's a concern. And now we've got a longer one here that is going to be way down here at 0. I don't think you want to wait for the stock with this much volatility to move from 270 to 220 while you move back to 0. So you had a peak, you moved up, you pulled back a little, and on the next peak you had a lot lower momentum, not a lot lower, you had lower momentum than the prior peak. It's that change. So this peak versus this peak, so you went up, but as you went up, you had less momentum, and now we're starting to break these trend lines. So for me, a stock like this looks concerning, and again, I like to exit and re-enter when they start to set up again. That would be the way I'd prefer to play it rather than ride the volatility. I have trouble, holding it for a $50 pullback. So yeah, it really depends on your trading style, but the point I want to make on these is that these strong stocks or tech names, I would expect them to do pretty well. Now, when they stop doing well, that's something we want to take note of. So this pretty much bottomed when all the tech names did around the 10th, 17th of May in there, and it's been a nice run. And if we go to ARK, which is Kathy Wood's fund, we were trying to break through these prior highs. And what I don't like now is the scooter ranking actually ran up and pulled down and is starting to drop below. So we're trying to hold the 200-day moving average, but now we're starting to lose momentum here. Even though the NASDAQ is going higher, this stock or this ETF is already rolling over. Again, we've got an uptrend line here that's getting ready to crack. We have a PPO that's already giving us a sell signal. So there's a few things shaping up that make it a little bit more uncomfortable for me. And this Rublox was IPO recently. Lots of hype around it. Went from 63 to 103 in a couple of weeks. Now it's got an uptrend line that's just starting to crack, and you've got a downtrend line that's pretty firmly in place on a relatively widely viewed stock. And we can go to other names like Uber that we keep expecting to break out. And what have we got here? We've got just a big doming top structure. And if we go to Lyft, this one isn't quite as obvious, but we chattered around here for 2 months trying to push to new highs, couldn't, pull back, and then drop down. So we want to be aware that the market is struggling here. A lot of these growth names are not really hitting on all cylinders. Now, we have other ways to view this. One way would be to just go to the homepage and look specifically in on what is working. So for the S&P 500, the percent up stocks, what actually did really well today. Teledyne had a nice breakout, so that's a good looking name. Here's PepsiCo, so that's a defensive stock actually really starting to outperform. Interesting. PPO bouncing off above 0. Here's MasterCard and Visa, both considered relatively defensive. They're not growth really anymore. They're expanding, but not growth. So they're a pretty strong name. But you can see they both had big days here on the push up. Autodesk just kind of trying to break through prior highs. We'll see if it can. Electronic Arts got kind of a sideways structure, if nothing else, going. We'll see if it can break out to the upside. Microsoft we already talked about. Devon Energy is pulling back here a little bit. They don't go straight up, but again, the next question would be, can it turn the corner and continue to rise? And here's Domino's Pizza, an unbelievable ribbon higher, very smooth, looks pretty good to me. And Fiserv is trying to turn up. So just looking across to see what's working. Again, some big names, but not necessarily growth names. Might be more safety oriented than growth. Lastly, I want to finish on the oil names, and the reason I want to finish on oil, sorry, Candle Glance of West Texas. The reason I want to finish on oil is we had a meaningful pullback. We broke out to new 7-year highs, pulled back just for 3 days, and we dropped 10%. And now we're rallying back up, and we're trying to get through the prior high. So this is the highest close we've had on oil, and if we can break out here, I think there's another whole leg higher. So that's another area that I want to stay focused on. If oil's going to go higher, I think there's a reason for it to go a lot higher. We're just not drilling enough wells based on how fast people are using up energy, and so with that gap, I think we get pushed a lot higher. So I like this little bull flag, and if it can break out here, that's important. If it rolls over, then I got to kind of reevaluate how I want to look at this. But for me, the inventory data continues to be very, very bullish. And if we see a breakout to the upside, that would kind of keep me on board. When we look at the oil stocks, XOP is the exploration and production names. They haven't done anything for a whole month. So either they're going to start to fire up on earnings here, or we're going to see them roll meaningfully down. With the breadth kind of shrinking across the markets, it's been okay to be long as you're in the right stuff. But a lot of these stocks, you're getting hit owning them well. The market continues to make higher highs, but you're in individual names and they're not actually grinding higher. I want to watch oil to make sure that it can make this turn, and that this time the energy stocks follow, because they really didn't follow to new highs as oil broke out to 77. So a whole bunch of cross currents here where the energy stocks aren't following oil higher. The tech names are kind of rolling over, but we're moving into the large cap tech, which isn't bad. It's just that it can be more defensive and staying away from the growthier names that we've been accustomed to watching. And then the third part of the sequence is that the financials really need to finish this week strong, and if they don't, then I'm a lot more concerned. So all this sets up heading into options expiration on Friday and makes us really pay attention to price action here. For me, it means setting my stops tight. If I have to get out of some positions and take new ones coming up, I'd be happy to do that. I just want to make sure that in what should be a big bullish period, if the market's going to roll over, I don't want to roll over with it. And again, we're moving past the best comparison quarter, so we're moving into a weak comp, and that's more of a problem. Thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern. You can also see the recordings on StockCharts TV YouTube page or StockCharts on demand. Thanks, everybody. Have a great week. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.